Educating investors.
The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on the second day of January, very first trading day of the year. We're up $314 at 42,846 in the Dow. Doesn't look like very much on the chart, but it was really important that this arch formation starts to see the upside so that we can get a lowercase h. I may as well just show it to you here. Let me go to this. Right here, got the pattern. Talk about the pattern. Let's show the pattern, and the pattern is this: if the price that you're following, the symbol that you're following, it makes a sharp pullback, and then it has a rally, and that rally starts to stall at a peak A or a B. This here is not an A because you have to wait for a trough before you can start the wave count. So that's the first A. And that started to fail. But look, the 42,146 held because it came down to the 42,200s. And now it's having at least a decent bounce. It's off the intraday high of 42,900. Most importantly, 42,905, what we are looking at is it's at least attempting a rally. So it's been one of the weaker indices. So this lowercase h, I'm anticipating, is going to attempt a second arch formation. How it rallies is going to be very important. How it sustains any move to the upside is important. I'm not sure at this particular point that I see it going very much over this peak A right here to start leg B, maybe in the 43,490s, 43,500. It's a work in progress. So that's the lowercase h can go to a lowercase m, and then that becomes important. Let me just show you in real terms what it means. It means that if you're looking at the TLT, that is the bonds, which are up 55 cents right now at 87.88. Here's this pattern that went to an 8. Look, at first H failed. Lowercase h made a dreaded H pattern because it took out the left side low. Then it rallied and it had another arch formation which held the left side low, and that was in the 83-ish area. And then it rallied again to a slightly higher high, but then it started to fail. So that H becomes an M. I'm just looking at patterns and saying patterns repeat over and over. Why? Because it's the archetype of the human nature movements that go from excess to sparsity to momentary periods of ebullience, and then it fails. And this is all we're looking at. This is a price point of human nature, right? So let's go back to the Dow. So the Dow right now, giving back a little bit of the gain, intraday gain, it's at 42,822. Still pretty good. Not great, but pretty good. Now look at this. The 9-period moving average is still very weak. It's the pink line right there. And then it has to go above the black line, which is at 43,177. But it has to go even much higher. It has to go to, I would say that it really has to go to about 43,300s for that pink line to get close to crossing positive. So it's a work in progress. When you're looking at the S&P, it's a slightly different pattern. Why? Because it had a huge rally off the 58.32 low of third week of December, went all the way Chapman wave inside track repellent zone, got repelled, and it pulled back very sharply, but it didn't take out 58.82. It stopped at about 58. Am I saying 32 or 82? 32. Okay, so that 32 level, last time we stopped on, this is on Friday, at 58.68. So now there's a good rally, and in fact, it's made another gray A because it went above the high of Friday. So this is a gray A. Gray means I don't have any confirmation that this is a buy signal or anything other than a bounce at this particular point. So I usually make it gray. I'll do that right now because the beginning of the year, beginning of this particular phase, and that's gray. Look at the QQQ. The QQQ had an even bigger move from its low. The QQQ went from our all-time high of 539.15 with a round number, 533 open on the 16th of December, made that all-time high a few points higher. Then it pulled back very sharply, went down to the 510 area, rallied sharply just above the inside track repellent zone, made an arch formation, came back, and then retested but didn't take out the low Thursday or Monday or Tuesday. And look what's happened. It's had a very nice, let me show you. The 9-period moving average on Thursday went negative. Today, still negative. It doesn't have to do very much more to go green. It means that it's at 515. Any test of 519 to 520 this week would be very positive. Peak D in the weekly chart, leg D. So what I did for subscribers to my opening call, we were raising cash. We were waiting for a pullback. This morning, we added to one of our positions, trading position. We started a position that we had initially a week or two ago, about a week ago, and it didn't work. But I liked the action, and I said we're going back in because it's in a sector it's totally out of, it's just not on the spectrum at all. If we can get in here and it can rally, at least for a week or two, that's going to be a very good sign to say that's the rotation I'm expecting, that you're going to go to other sectors as maybe and you can see this in Microsoft, which is at this particular point, Microsoft's up about 4, but it's really stuck in a range. And there's selectivity here. And while I'm talking about it, round numbers, Amazon made a round number all-time high of 233.00 on the 16th of December. It's down at 224 right now. I think it's going to do a little struggling here. I don't know if it's breaking down, but I think it's going to have a tough time. It could take out that high, but I think it's going to work very hard to get there from 224 to 233. Doesn't sound like much, but the holiday season's done, so we're watching it. So when you look at the different stocks that have been leading, I think some of them are now going to take a breather and others are going to take over. If you look at, we would do the QQQ. The QQQ is rallying quite nicely, up 5 at 516. But when you look at that ugly red candle from Tuesday, this is just getting back some of those gains, some of those losses. Now let's go on to the IWM. And this is a good sign because IWM is running quite nicely at 223.85. It's up 287, up $1, 1.3%, I should say. But there's a lot of work. Look at the 9-period moving average in the weekly chart. All the weekly charts have held very well. This one got really close to the 9-period moving average, crossing negatively. So this week's really important going into maybe Wednesday of next week. We want to see what happens here. Can the IW and the Russell 2000 show that it's got strength? And just to put it in perspective, the XLF took quite a beating from its all-time high at 50. Did I type that in? No, I think I forgot to. Yeah, just under about 51.5. It came all the way down to the 47s, and now it's trading at 48.71. So to put that together with the S&P and the IWM, KRE is not acting all that well. That's the regional banks. I'll be back in a moment. Dow's up 321. S&P's up 49.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi, folks. So what I'm saying is that the regional banks need to move and they haven't moved. That's going to be, for me, a really important factor in this first quarter of 2025. I need to see the XLF, that's the money center banks, moving up nicely again like they did before. They've taken a bit of a breather. But the KRE, which we were long, we got out of it. We said we've done okay. We just gave it a chance. Didn't want to perform like we thought it should. We got out and we said we'll wait for the next entry. And I'm watching it, KRE Regional Bank Index, closely. Now, I had a question. I don't know whether, I can't find it right now, about 200-period moving average. Why I use 914, sometimes the 50, sometimes the 100, very rarely though. But I use the 200 a lot. You know, I found the 200, let me just see. Look, here, this is Uranium Energy Corporation. Look at this bounce. It goes, where does it go to? It hasn't even looked at the 200-period moving average since it broke out back in September the 23rd. It goes from 572 to 634 and rallies all the way up to 867. And then it makes a peak G at 867. It pulls back and it goes peak A, peak B, peak. Remember, peak D in the Chapman wave is your objective in a buy signal upgraded to a buy mode. It can go higher, but D, the fourth highest peak, is what you expect. We never got that in the Dow. We never got that in the VT, which is the Vanguard total return, a world total return. And that's really crazy that I just don't understand it. There could still be time to do it, but it hasn't done it yet. But everything else did. D, E, F. Look at this. So it went to this second peak, D right here, and it went to 893. That was on the 6th of December. Then what does it do? It arches over and it comes back down, and it just Friday. I keep thinking it was Friday. That this is a Monday. It's not. This is a Thursday because New Year's it was yesterday. Very confusing. On Tuesday, what does it do? It hits exactly for the first time since September the 200-period moving average. It's like an electric wire. Just a shock. Whoosh. Look what it does. It springs up 61 cents today to 7.30 from the low on Friday of 6.69. That's the action of a 200-period moving average. It doesn't always do that, but when it does, it's amazing. And all you do is you just let it sit there. You don't have to do anything with it because the price does it for you. So what did it do? It went right to the 14-period moving average. The pink is still under it. It's still negative action. We're actually still long from quite a while back. But isn't that interesting how it just popped up? Day is young. Anything could happen. Good fail. Let's go on. We want to look at the so the question came in, if I could look at the GDX. I will look at the GDX. Let me get there. So we were talking about these different indices, and now we have to go to the SMHs, the semiconductors. And you can see it's up. They're up 334 at 245.52. This is the Van Eck Semiconductor ETF. All-time high was at peak D back in July at 283.07, plunges down to the 200 level, spikes up to the 260s, makes a little double top peak C1, C2 in the weekly chart. The loss was a peak D in the daily chart. And lo and behold, the 9-period moving average is still holding well, but it's getting really close to turning pink. But the price has just been stuck between 258 and 238 just for weeks. So that's what can happen. Remember, sideways is a directional trade, and if you're able to do it, and if you can use options to see the diminution of premium, that's a nicer way to play. But in the meantime, SMHs are very important. However, look at NVIDIA. NVIDIA today up 270 at 136.82, just stuck in a range, just like the overall SMHs. But wait a minute. Broadcom. Broadcom is AVGO. I wish they would change that back to, we'll never do that, BRCM. I mentioned the round numbers. It had a 251.88 high on the 16th of December, comes charging down, and then it trades between 240 round number high at the open with a high of 247.28 on the 26th of December, and most recently the 245 open. I think that was the very next day, and it's just been chopping around. So it's not going anywhere. So we're not seeing the semiconductor index fail, but we are seeing it stall, and it's been stalled for a while. And that to me is very important. The other thing that I'm looking at here, and this is going to be quite important as far as I'm concerned, do you look at the SLX? This is the Van Eck Vector Steel ETF. Makes an all-time high. I think it was about November, December of not last year, but the year before, up in the 75 area. And then what does it do? It tries to retest and it fails. Goes into the inside track repellent zone one more time, pulls back, and then it drops, has a good bounce, tries to get into that inside track repellent zone. It couldn't do it. And this last month, December, was just horrible. It goes from the 72 area down to the 57s. It's trading right now at 58.73, barely rallying, up 27 cents at 58.73. And this is the deep cyclicals. This is a problem. You've got U.S. Steel. Of course, there was takeover rumors and all sorts of things, takeover attempts, and that's been foiled by the government. Meantime, it's trading down 43 cents at 33.56. But you got NUE, is it NUE or NEU? Nucor. Here's the chart. This is one of the very fine steel companies. This E/C is actually an E right now, alternate count. So until we can get these deep cyclicals really moving up, I mean moving up in the sense that they are starting to lead as a sector, that's a focal point, a bigger upside move is really it's going to take some time. So I had a question here. What was the question? Are you looking to short an index on this bounce? Very good question, because the answer is yes. The answer is I'm looking at shorting. We had a short in place that didn't work, took a very small loss, but I had it as a kind of almost an experiment to see if that was the place to be. It kind of was the place to be. We tried to get back in, and we couldn't get back in. And as a result, I said today, let's leave that for the moment. But that, I think, will be back in play very soon. So I'm waiting to see, let's go, well, I've already done these. Do we get this second arch formation? How high does it go? And where would you place a short position? Now, I don't want to mix things up because we've just added long positions, 2 long positions today, but they're in areas that have been very weak up until recently. So, and I don't want to experiment with my subscribers' money, but I treat it as an experiment in getting into a position that has the potential to move higher against the backdrop of anything that happens in other sectors. So I'm trying to show that there are stocks and sectors that might be independent of the general market, and this is the test the next week. I'll be right back. Dow's now only up 148, S&P's up 26. I'll be right back. Basil Chapman.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Hi folks, we're back. We're back in the Dow's now only up 90 and the S&P's up 16. A little give back there, huh? And that's the thing I was a little afraid of. So in our long position, our trading long position, I've had a fairly tight stop, a little wider than usual. But in the other two positions, stock positions, and I like for subscribers, I like a choice. We got one that was in the 90s today, one that was in the $30 area, $38. Another one in the $3.80 area. I like to have a real mix of prices as well as areas that you're looking at. So we'll see if that's going to work. Two of them are working very nicely. One was, now it's pulling back. And the question came in from, John. Yeah, John wanted to know about CVX. This was actually one on my list today that I was wanting to go long. I decided to go elsewhere only because if the elsewhere, a much lower price, worked, I thought that that would also allow me the time to go into something more pricey. It's not a big deal between paying 145 or 148 if you think that there's quite a bit of upside potential. But in the very low priced area, you kind of want to get the lows. So you've got some cushion. That's the way I'm looking at it. And here we are. We've got CVX trading up 269 and 147.56. That's Chevron Corporation, multinational oil company. Now, what I like about the oils, and I always say, if we're going to get into the oils, you want to get into the low range so that you can get capital appreciation as well as the dividend. I don't want to get a fantastic dividend and see my capital of 150 or 140 go down to 120. Oh, fabulous. I'm getting what a wonderful dividend. And my capital is just disappearing. It has to go together. And it's one of the reasons why at one point we were in the XLC, which is the Communications and Service Select Sector Spider Fund a long time ago. And then I looked at Verizon and telephone, and I thought, they're not doing well, and people are cutting the cord, and we got out of it, and I never got back in. That was the dumbest move because I forgot that that's a sector that has Meta, Google, Netflix. I mean, really, it was not clever on my part. So, okay, so this is different. So CVX, I'm going to say to you that the 2 or 3 points that you've just missed by its gapping up from Friday's, I keep saying Friday because Tuesdays trading in the 140, I'll give you the exact prices, the 143.32 low and the 145.34 high. So you're now 3 points higher, but it's not a big deal if I'm correct in saying that the rotation as money finally has gone back into the crude oil after just avoiding it completely. And this, in a sense, now is not the Mideast. This is more the Mideast conflict. This is just price opportunity that I'm looking at and saying they start to maybe cut back a little bit on oil so prices can go up. I'm looking at it positively, but I'm also saying I have to consider that the upside, the 152 level where the 200-period moving average is, to me, getting close to that would be a big achievement. So I'm going to suggest, John, that if you're interested in it, why not just get your foot in the door, start a position here at 147.81. Unfortunately, it's going to have about a 4-point stop, just the initial entry point. And I would add to it if how can I do this? Because it's a little complicated in articulating what I want. Because what I want is not to take out today's low of 145.48, and at the same time, I want to add to it if the price goes higher. I don't want to add to it if the price comes down. So start your position here, but in that position, split it so that a core of the position goes in, but some of it is held back because at this point, just a minor pullback from 147 to 146.90, that's fine. Then you can add to it. But what I would say is if tomorrow it's able to get to, I don't know what the high is today because the day's just started. It's at 147.81 right now. That's the high. It's close to it right now. So I would want to add to it, but at least start your position. Let's look at it tomorrow. I'm just hesitant to say to you, get your full position now, because the candle from 3 weeks ago is just such an ugly candle. It says there's a lot that has to happen. It's got to fill this gap, just even the gap from the high of the 17th, which is at 146.91. Oops, that's the high. No, 148.65, and then the previous day's low of 149.25. So it's got a little bit of way to go to get even to the gap. So start your position, but a little bit you got to leave off that position, and that's the position that you're going to either add on a pullback or you're going to add on a push higher. But I need to, at this point, I'm going to give it not more than 3.5 points of a stop in the next 2 days. Let's put it that way, okay? And that's the reason why is you want to see it in a week or two weeks' time, trading the 147 to 152 area. And now you can look at it and say, now it's building steam to go back into the higher part of the rectangle, which you could take out. I don't even want to mention the prices. Let's go one step at a time. I don't want to see it break under 145 to 143. That just says up, sideways. Let's look at Exxon at the same time. Exxon's a little bit better because it's already gotten to a C. But then you say to yourself, wait a minute, it's not very much to go to a C, a leg C, when it's come down from the 120s to the 105 area, and now it's trading at 108.50, and it's only gotten to a C. That C should have been much higher. So yes, No, I think Chevron, I've been saying for a little while, Chevron is actually a better looking stock for a rally. Exxon's your steady stock over the decades. It just goes higher and higher and higher. Decades, that is. So, all right. Yeah, that was your question. That was my answer. Okay, next question is, where did it go? Oh, the GDX. So the GDX is the gold miners ETF. That's a nice move up today, up $1.18 at 35.09. I'm looking at this and I'm saying, gosh, that move from the 39s down to the 33s, that was almost a straight down move. Trough A, trough B, leg C. This could be a trough C right now. That's the best that I can make it. Yeah, B right there. And then there's a C, and this is a gray A. Gray because the stochastic's still at 10%. On balance, volume is very weak. The MACD is trying its best to cross positive, but it hasn't. But the relative strength index is good. 9-period moving is way under the 14, so it's a work in progress. Yeah, GDX, I'll be back in a moment. I want to talk about it a little bit more because this is going to be a very important moment to see whether gold has any traction to the upside and sustainability if it can rally. I'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Hi, folks. You can see from this E-mini chart, even the single leg 8 to the upside that started about just before 10 o'clock is in a failure mode. It's coming all the way back. So this just confirms to me that the pattern that I've been looking at, which was a bounce, and that bounce should probably fail, and we're going to be in a trading range with limited upside. But at this point, I'm still saying that the downside, I'm not seeing just an open hole right here with no support at all. I do see support, but it's going to be much more difficult. And that's the reason why I'm saying that the rotational part of looking at different sectors is important. So the GDX, so the question, 3 questions came in. One is about the GDX. The other one is about just my assessment of the gold chart itself. And the third one is, don't forget silver. So look, gold right now is up 25 at 2,666. Sounds fantastic. And actually, it is in a leg C. Now, the question came in about GCG. I'm going to, if you don't mind, I'm going to stick with this continuous contract because look, the GCG 25 contract is virtually the same. And I've done no notation, but I have done notation in the continuous contract, so I'm feeling more comfortable. So that weekly chart, I haven't even had I'm waiting until tomorrow to see whether or not I put a down arrow at that peak E, because it's used up 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 10 weeks. So actually, no, I have no choice. 10 weeks, come on. Even though the 9-period moving average hasn't turned down, I do have to put a down arrow to say there's a sell signal in the weekly charts. It's done the H pattern, but it's holding well, and that can change. But in the meantime, I'm considering that this range in gold is going to be very important. If gold at 26.65 right now, the continuous contract, is able to close, I don't mean just tag it once, I mean to close and then trade in the area, the midpoint of this ugly candle, which is at 2691. So in other words, if gold can hold for maybe 2-3 sessions trading, it doesn't have to hold the price, but it's got to get into that at least 2 out of 3 times attempts and then hold there into the 2690s. It needs to do that because that will really improve the weekly chart to say, hey, I'm now going to the upper band of this rectangle pattern. It's not fantastic, but it's very good. And the monthly chart, I've still got this as a peak C, saying there should be in 2025 a leg D to the upside. So I'm looking at this and I'm saying on a very short-term basis, what's needed is that this pink 9-period moving average crosses green, and it'll do that if you can get to the 2678, 2680 area. But most importantly, the low of today is 2636. A close under 2630 says no. It's just stuck in a range, and it's a better chance that it's going to retest the 2580s than the 2680s. Right now, I'm looking at it quite positive. For subscribers, we still have our gold position. It's not doing great, but it's not doing badly. It's just there. It's still up, and that's important. So that's gold. But look at the GDX. This is a very nice move, but these one-time moves to the upside, you can see it, that the MACD still has to cross positive, but look at that relative strength index. That's nice action. Look at the 0% line in the MACD. It's very close to turning positive. So that just says to me that the GDX, the gold miners, the Vectors ETF, could tag 3636, which is the 9-period exponential moving average, in the first week or two of January, if not just this gap. The low today in the GDX is 34.44. I don't even want to see the pink 9-period moving average of 34.68 taken out. It's got to move higher immediately. This is ASAP. This is speed. It needs it. It has to get into this ugly candle right here, the candle of the 18th with the high of 36.09 and the low of 34.36. It's just got to get into the higher part, into the 3580s. It's at 3507 right now. If it can do that, I'd say great. Now you can see a little bit of a cup formation, or at least the attempt at a cup formation, and that could get you to the higher point. If at any stage the GDX tags intraday 3588 to 3595, that 3623 200-period moving average becomes a magnet. Until then, it's going to be tough. Okay, silver, SLV, trading right now up 49 cents, 26.81. Remember, they've been doing different things other than both going down. They have slightly different chart patterns. So silver itself, that's a nice candle. There's your dreaded H. Yes, this is what I was thinking could happen with the Dow. It's not happening, believe me now. But look, the arch formation with a second arch formation going to a lowercase m. Silver trading at 29.86 right now, up 62 cents. Yeah, it's a start. But the weekly chart says, wow, there's a lot to go. So until silver's trading at 30.55, that's a continuous contract, I'm just considering this a little bit of a bounce. Question came in. So let's see, Basil, hi Basil, can you look at GRAB, G-R-A-B, GRAB. Okay, we got GRAB up right now. It's up 8 cents at 4.79. Okay, on the show for a long, it's pulled back after what looks to have been a peak D. I didn't do the work, so I'll do it right now. So, okay, let me do this quickly. Peak A, then a peak A, then a peak A. B, C, D. I got it as an E, and then a brand new A, B, C. Yeah, D. Okay. This is the second peak. D right there. Got a D right there. Okay, it pulls back. Okay. So let me go on. Afterward, a week peak D in the weekly chart. Yeah, peak A, B, C, absolutely. Peak D in the weekly chart. Got it right there. We're in unison, Jason. The 9 EMA looks to have finally moved over the 14 on the monthly. Well, no, it's done that for a little while. And what about this now? Grab is the Uber of Southeast Asia, based in Singapore. They also have a SoFi-type digital bank feature in an area that still has a lot of unbanked residents. There's Jason. Hey, Jason, I know everyone's perked up here because when Jason asked a question, he did that with Rocket RKLB, I think, Rocket Lab. Oops, I typed it in over here. Rocket Lab, and it was a spectacular move. RKLB. Whoa, talk about spectacular move. I think you were in the 7s or something like that over there. And look at this, it's now the 24 areas down 80 cents today after making 28.80 high just a week ago. Yeah, so we're listening to you, Grab. Okay, so Grab on a purely break coming up. Oh, then I'll only have one segment in which to do it, but I've still got questions. Okay, that'll give you a chance to do some work on it. Grab is what we're looking at, folks. It's called Grab Holdings. It's the Southeast Asia Uber. I'll be right back. Dow's up 121. Oh, what a struggle for a pearl down.
The consistency you're looking for is closer than you think. 1 or 2 adjustments are usually all you need to change your equity curve from red to green and keep it there. Come join Larry Pesavento live to learn what separates the winners from the losers. Join Larry Pesavento on the 2nd and 4th Friday of every month for 3 hours of live trading from 9 a.m. to 12 p.m. Eastern Time, where Larry will show you the market setting up and, most important of all, the state of mind of a winning trader. By watching Larry trade, you'll learn the Fibonacci levels, you'll learn how to apply A to B to C to D trading patterns, you'll learn trade management, pattern recognition, and much more. Join Larry October 11th and 25th for more live trading action. Your purchase goes towards 2 sessions, so make sure to sign up now so you don't miss a chance to sit next to Larry as he trades the market live. For all information and to reserve your spot today, go to the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
So I'm going to run out of time right now, Jason, but I am going to say to you this, 4.81 right now. The way the characteristic of those 2 candles from Monday and Tuesday with a doji candle, small doji, and then a wider doji candle, a slightly longer candle, and now a strong green candle. This is the time at least to start your engines at 481. I wouldn't get carried away because if this is going to work, you're going to have plenty of time to get in. So start your engine at 481. I can't even say to you use a stop from Tuesday, which is at the bottom of it's 465. I'd put in a position that allows you like 460, at least a little room right now, and then you can tighten it up as if it moves higher. So let's just start the position here, but I don't have anything other than a start your position because I have no turnaround in any of the indices. So let's do that. So just as we're about to wrap up, I had one other question. Let me look down and see what it is. So I'll do this tomorrow because it's Technical Friday. I'll go through Cintas and all those others. See, Cintas isn't rallying much here. Uri, this is the rental company, United Rentals. Nothing to see. That's why I'm saying this is very selective. One of the reasons why I thought it was a good opportunity to go into certain areas. I haven't done Bitcoin. Bitcoin, I had said, made a high back in 110,180 on the 17th of December. Now it's in a rather large consolidation phase. That's all I'm saying. We are still long out for subscribers. We're still long iBit. That's the iShares. So as I'm wrapping it up, I'm handing you over to Steve Rhodes. Should be great program as always. Check out my Opening Call Daily Newsletter. As I say, we just got into some new positions today. I think it's very important that they do work. If they do work, it's going to be just telling us a lot about the rotation that's going to go on in this first part of this is really beginning of January of 2025. With that, I would like to see the Dow close over 200 points today and not minus. That would be very negative. Meantime, back at the ranch, I'm going to say have a wonderful New Year.